So welcome back again. We have with us CA Prashant Daftary with us, who is going to take practical insights into the audit of companies. And Prashant has been really helpful in devising today's program. And we had a good discussion and what all topics will be covered. So this session is going to be very interesting. So I request CA Naresh Mandorwar to give a formal introduction.
Thank you. So, Prashant ji. Hello, good morning, everyone. Prashant ji is a partner at a firm with nearly 24 years experience in the audit and assurance practice. He started his practice long back in 2001. And Prashant's dedications and passions towards his work has been seen being elevated to a partner. Prashant has been involved with a cross sections of clients in diverse sectors to help them bring a systematic, disciplined approach to evaluate and improve the effectiveness of risk management. His area of expertise includes internal audit management audits, internal financials control, risk assessments, process review and SOP drafting, due diligence, and statutory audits. He has made a number of presentations of internal audits, India's accounting standards, internal financial controls, and various other topics related to accounting and auditing at WRC, CTC, and study circles. Prashant is also an internal audit expert and has contributed significantly in shaping the firm's internal audit practice. Prashant has contributed as a convener for the Accounts and Audit Committee of Chamber of Tax Consultant. He was also a part of a memberships and advocacy committee at the II Mumbai chapter for financial year 23-24. He has a bachelor degree in commerce from the Mumbai University and a qualified chartered accountant in the year 2004. Thank you.
Thank you so much, Naresh. I recognize the presence of our WRC treasurer, CA Kedia. And I request her to please come, and Ankush also please come to give a memento.
This presentation is
वो है ना स्क्रीन से हो गया Good morning, everybody. On this Sunday morning, this is a topic which has been decided, that practical insights on audit of companies, and very thankful to the JV Nagar committee for inviting me. And I think this is an important topic because we are all in midst of finalizing the balance sheets for various companies, especially private limited companies. The listed definitely would have gone, and it is like a refresher where we touch upon various aspects of the auditing in companies, the practical challenges that we face. And since we all know what accounting standards, what auditing standards, because we are doing it on a daily basis, so we will not get into the technical part of it, but let us focus more on the practical aspects and the challenges that do come across when we do the audit. And I'll try to focus more on the IGAP portion and later on also try to cover some of the important amendments like the audit trail, which is there for this year. And obviously on the private limited companies, I believe there will be more challenges as compared to some of the more organized clients. The 43H amendment, which is there for this tax audit MSME, we will touch upon something of that also, because that is another challenging area which will be there first time for this year's audits. So this is what I have tried to cover. We try to focus on the key aspects of the auditing of the companies, starting from accounting standards, auditing standards, Companies Act, and taxation related aspects. We touch upon various things from auditing standards, some of the accounting standards where there are some challenges or practical issues, how to practically comply with auditing standards, because that has become another area of a challenge, because with peer review becoming mandatory, the audit quality maturity model and all those things which are coming into the picture, the compliance with auditing standard has become very important. And maybe as a chartered accountant, we focused more on auditing standards, accounting standards, sorry, and less on auditing standards. But now we will have to change that approach also a little bit, where we focus more on auditing standards. Companies Act related some issues, 185, 186, deemed deposits, public deposits. We will try to touch upon that part of it, because for private limited companies, especially intergroup loans, intercompany borrowings, these are the issues which we face on a day-to-day basis. As I said, some of the commonly observed errors in financial statements, which have been either pointed out by QRB, FRRB, or something which from our own experiences we have seen. Audit trail, if time permits, we can touch upon one or two Ind AS amendments, but I don't think that is very relevant right now. 43BH and the way forward. When you do an audit of a company, at least these are the three pillars that you have to look at: accounting standard, auditing standard, and Companies Act. You typically look at these three, and you look at your taxation laws and other regulatory laws, because other regulatory laws could be, for example, if it is an insurance broker, you are IRDA. If it is an NBFC company, you have RBI, and there are a lot of requirements which also flow from those laws. So we have to be compliant and aware about some of those requirements which are there, especially RBI, IRDA. These are very relevant, and some of the private companies also, because for example, if you are doing a private NBFC, so you have to ensure what is now happening at RBI level, because the new scale-based directions have come, changes which are happening on a regular basis, and RBI as a regulator has become very active. ROC also is becoming more and more active. So Companies Act compliance has become very important. Taxes obviously is very important, because you do your provision for tax, but most of the cases you are also filing the returns of those companies, and it is an interlinked matter. Unless your taxation issues get resolved, your audit may not get finalized, because it both gets connected at some point in time. Yeah, and GST related issues, if there are any, because either it is input credit or the right rate of which GST is there, or for common services, whether the exempt and non-exempt ratio is applied correctly from an accounting and auditing point of view also. And even in GST, there are accumulated input credits and all those issues come up. So we start with the accounting standard, then go on to the auditing standards. Just as a background, accounting standards, you look at these 5 things: recognition, so measurement, treatment, and disclosure. So first you have to realize that there is an accounting entry that needs to be passed. Then you have to measure that accounting entry. Then you have to treat, whether it is capital, revenue, presentation, and disclosure. So sometimes this appears easy, but there are questions where there are challenges. For example, if there are barter transactions, what do you do? Or typically guarantees given by holding company to subsidiary company. Now, whether any accounting is required, not required, IGAP, generally no accounting is done, but now GST also, there are rules where they said mandatorily you have to charge commission. So now if that GST law is to be complied, whether you are going to do any accounting, not going to do any accounting. So those type of challenges do come upon. Though primarily recognition we all know, but certain cases we have to go beyond and see whether any accounting is required or not. Disclosure, another area where for private limited companies, it becomes a challenge, because the disclosures are increasing. The IGAP standards are slowly and steadily moving towards the Ind AS standards. So some of them, like property, plant, equipment, it is broadly in line with the Ind AS standard today. AS 15, retirement benefit, is very, very close to the Ind AS standard. Cash flow, inventory, not very significant changes which are there as compared to the Ind AS standard. So slowly and steadily, and at the institute level also, I believe there is a movement where the IGAP standard will slowly and steadily move towards Ind AS standards, maybe with certain exemptions and certain carve-outs and other things for smaller companies. So when you start your accounting standard thing, you have to first realize or check whether the company is a SMC or non-SMC. I think this is a very important step. We should first look at whether it is an SMC and non-SMC. Because SMC definition now with 250 crore turnover is a significantly large, because a lot of companies would fall within this criteria. 250 crore turnover, 50 crore borrowing is a significant number, and a lot of companies do fall upon within this criteria. Now, once you are within this criteria, obviously it is not a holding and subsidiary company of a non-SMC and all those things are there. But if you are falling within this criteria, then there are a lot of exemptions which are available in especially disclosure or application of some of the accounting standards. So if you are aware about this at the start of the audit, we can plan the audit in such a manner that you are able to reduce your time, inform your team in advance that we need to do not have these disclosures which are there. So if you have standard templates for SMC and a standard template for non-SMC, the overall efforts that you can take reduces substantially. Because what also we have to ensure is that with private limited companies, a lot of times the clients are not so well equipped to handle some of the disclosure requirements, and our team may have to help them or support them. Now, within that, the cost, fees, all those things also have to be balanced. So if there are standard templates for SMC and non-SMC, it really helps in speeding up things. So these are some of the exemptions which are available for an SMC company. And very important, on the employee benefits, there are a lot of exemptions. It does not mean that actual valuation is not to be done. Actual valuation is required, but some of the disclosures, there are exemptions. AS 17 is completely exempt because there is another, if the segment reporting, what happens is there is also a lot of time and effort which requires, if there are two segments, segregating the cost, a common cost, bifurcating the figures, it requires a lot of time and effort. So there is a significant exemption which is available. Lease also, various disclosures are exempt. So again, another standard which is slightly complicated. There are certain disclosure related exemptions which have been provided, very important. Earning per share, diluted EPS, there is an exemption. Diluted EPS also can get very complicated in case of some specific instrument like CCPS, OCPS, and all those things. There are complications which are there, so it is simplified. Impairment also another area where a lot of detailed calculations are required. Maybe you may need some reports from external agencies or valuation reports may be required, but there also more broader or a simplified working can be done, especially in a SMC company. So if you are doing an SMC company, your mindset has to be that it's an SMC company. I have these many exemptions. So these exemptions we can avail, reduce the time and efforts to ensure that the audit gets handled more smoothly. So awareness about this is very important. That is what I'm trying to say. A lot of times it gets missed. Now, if you have to avail these exemptions, you have to ensure that there is a specific disclosure in the financial statement that you have availed these exemptions. That company is an SMC company, and being an SMC company, we have availed the exemption of SMC. That is a mandatory statement that you need to have. You cannot say that I have availed, but I have not mentioned it. Then there is no benefit which you can take. So you have to mention that in your accounting policy, maybe in the opening paragraph, you will have to mention that we are taking the benefit of the SMC, and accordingly, all these disclosures are not applicable to me. So then that makes proper sense. There is a transition provision. So if there is a non-SMC company which is now getting reduced. So for example, if the first year my turnover was 300 crores and now it is 250 crores. Immediately the first year you cannot avail the exemption. You need to wait for 2 consecutive years to avail that exemption. So that is another requirement you have to be careful about. You don't need to change the previous year figures once you are coming into the SMC mode. And the disclosure has to be given that you are availing this. Previous year, in case you have not availed and now you are availing, then you don't need to restate any previous year figure. So this makes life little simpler. Awareness about this is very, very important. Cash flow is still applicable to SMC company because unless and until it is exempted by the definition of a small company, because the Companies Act mandatorily requires cash flow as a part of the financial statements. So cash flow is applicable unless you are a small company. That is very, very important because cash flow is another standard which takes a lot of time and efforts, and most of the clients are unable to prepare cash flow. So another definition that you need to take care is about a small company. Here also it is quite large, 40 crores, 4 crore paid up capital is another large limit which is there. It is not very small. A lot of clients may also fall within the definition. So be aware that it is a small company, because if it is a small company, there are more exemptions which are available. So cash flow, CARO, IFC, multiple exemptions are available. So at the start, you need to take care about all this, whether it is small company, not a small company. Even the new rule on demat of shares, small companies, there is exemption. So awareness about these rules and the interplay with the accounting standards play a very, very important role in planning of the audit and awareness at the start of the audit. And I'm repeating that because when we start the audit, typically the team will miss out. They will do the audit, and when the balance sheet and notes are finalized, you realize that it is this exemption is available or exemption is not available. Typically, it happens that way. So let us look at some of the practical issues which are there when you try to do the audit. Yes, sir. Sorry? Turnover? No, paid up capital. Paid up capital, not reserves. So it's talks about only paid up capital. So we'll just look at some of the practical challenges which are happening when you start doing an audit. And these are the typical areas where either there are discussions which are required with the client, or where the audits get stuck. And I have tried to focus on only those areas. Inventory valuation, I want to start with, because though this is one of the oldest standard, very settled, everybody knows what is supposed to be done. But every time inventory valuation is generally an issue with the client, either at WIP level, finished goods level, especially on a SMC companies or not very large companies. The issues are there in terms of either the percentage completion may not be easily available. What are you going to do? So do you take management certificate only, or do you do some assessment, or some system has to be devised? Whether based on the stage of production, are you able to work with the management and do some thing? Initial years of audit, some time and effort should be given to clarity on the valuation, because that becomes very important, especially on the overheads portion. Because whether the capacity utilization has happened, not happened, under capacity utilization, all those adjustments are required to be made. And these are typical areas of challenges which I have seen. A lot of times companies say that we will do valuation at market price. So sales price is used as the inventory valuation. It is consistently followed for many years. And if you want to change, then it becomes another problem. So try to avoid getting into that trap. Maybe a simplistic formula, at least if you can devise, to ensure that there is a broad level compliance with the standard in terms of the overheads, in terms of the stage of completion, then it helps. So a standard template, if that can be devised with the help, with the joint interaction with the client and your team, that really helps in taking these things forward. Another area on inventory where there is a lot of issue is on the non-moving and slow-moving inventory. How do you identify? Some of the systems don't give aging reports. Do you rely only on management identification to say that these are my small moving inventories? What audit test do you perform? So sometimes typically we try to do is that if you look at the analysis of the stock, if there are items which have not moved from opening, then you identify and bring it to the management level that these are items which have not moved. Now you tell. Typical answer is that it will be sold in the next year. So there is nothing to be done. Now, whether you can accept that answer prima facie, answer is no, because now auditor skepticism has become a favorite word of all the regulators. And you have to be skepticism, that you have to have that professional skepticism that if it has not moved for 1 year, how on what basis you are saying that it will be moved in next year? Is there an order on hand? Is there a plan? Is there some logical reasoning? Maybe first year we accept the answer. Second year also it has not moved, and they still say that it is to be moved next year. There will be movement next year. Can you accept their answers? The answers are getting more and more difficult. As an auditor, then you will have to say, we will have to do some provisioning. We will have to reduce it to the NRV. Now the next question comes, what do you do in income tax? What do you do in accounts? Those challenges are there. But first, if you're finalizing the audit, focus on the accounting standard. Income tax will follow. There could be a different view in income tax. It is not necessary that both will marry. There are a lot of industry specific issues that we face, either in terms of diamonds, jewelry business, where inventory valuation becomes a real challenging task. Either you are relying on the valuer certificate, external valuation certificate, whether that will be allowed whether it will be permitted under AS2 has been a question mark. So there also efforts have to be made that you bring the valuation in line with AS2 in terms of cost built up approach, where you do the cost, overheads, and other things. If there are byproducts, joint products, please take care whether it is a byproduct or a joint product, because there is a difference in terms of method of valuation. If it is a byproduct, you reduce the scrap from the costing, and if it is a joint product, then you distribute the cost at the appropriate stage. So those issues in terms of inventory valuation, if there are 4 or 5 points, we should be careful. Another area where typically mistakes are happening is in terms of scrap. We finalize the balance sheet, but nobody has asked a question whether there is any scrap at the end of the year or not. Because if there is a scrap, it is sold in the month of April or May, we will definitely have to ask a question that whether it was existing in the month of March or not in the balance sheet, at least that stock of scrap has to be shown. If inventory physical verification has been done by our team, then yes, we may be able to identify such things or guide our juniors who are going there that please inquire whether there is any scrap stock or not, because very unlikely that there is no scrap at any point of time. So those awareness and those checkpoints, if we have there, we may be able to close things faster. Revenue recognition, another standard where issues are there. Sometimes we tend to ignore and continue where the practices are happening as per old practices, but we have to be more aware in terms of what is happening and what are the right practices. So cutoff sales, lot of times we see that the GRN or the material outward or the LR has not happened on 31st March and still the sales are getting recognized. This is one area where generally mistakes are happening, or there are materials which have returned subsequent to the year end. Even under IGAP, if materials have returned subsequent to the year end or there are expected sales return, you need to make a provision for it. So here you make a provision for the margin which is required. Under Ind AS, you reduce it from the turnover gross level only. But in IGAP, you make the provision under AS 29. So this is one area where typically mistakes happen in terms of non-provisioning for expected sales return and the cutoff related issues. Appropriate time and effort should be made on that. Real estate, there are challenges in terms of percentage completion. There is a guidance note which is given by the institute specifically to address these type of matters on the real estate. It's a topic by itself, but if in case you are handling real estate, be careful that the percentage completion, whether how it is done, the method of revenue recognition, because the guidance note prescribes POCM mostly for the developer, and completed contract method is generally not permitted unless there are certain situations or specific contracts where you can take that view. But generally under IGAP, percentage completion is going to be the method. So we have to take care in terms of either the budgets, cost estimates, calculation of POCM from where it is coming. Those additional time and efforts in real estate is required. And also the real estate, your inventory valuation and revenue recognition go hand in hand. So that area where time and efforts have to be placed, and you have to do it in advance. That understanding of these issues have to be there right at the start of the audit, and the senior has to intervene at the start. That these are my 6, 7, 8 points which are going to be my problem points. These are how I'm going to resolve those points, and then the juniors can do the audit. That guidance at the start of the audit is very important if you want to practically close with proper satisfaction and proper documentation. Another areas where, especially in private limited companies, there are problems or issues which come is intercompany loans. There are group company loans. Now, typically group company loans, we don't do anything. We say management, is there all group company loans, money is good. Now, only because there are group company loans, money is good, does not really justify that why only because they have given to group company, they are good. No, if that group company has incurred losses, if their money is stuck somewhere, how much inquiries are we making on that area? And in most of the private limited companies, believe me, these intergroup company loans are a routine feature, because either they may be given to promoter related entities or other group companies for businesses, or it may be like a running account which is there. Sometimes they are interest bearing, sometimes they are interest free. So what documentation is there, whether what is the purpose of those loans? That are the areas which have now become very, very important and have become more focused. That you will have to have proper audit questions, conclusion on those areas, whether any impairment is required or not, whether is that loan is going to come back or not. Management will say that is all good. Now, whether it will come back, not come back, is always a question you'll have to make inquiry. So, for example, I can give an example where one of the Indian company had given a loan to a foreign subsidiary, and that foreign subsidiary has bought a vessel. Now, So it was a back-to-back borrowing which was happened. He had taken a loan from bank, you give it to a subsidiary. It was as per the permitted use. Now, if the vessel is not performing as per the expectations, or if the market conditions have deteriorated at that level, you will have to make inquiry that if you're a group company or that subsidiary, the underlying asset where the money is utilized, if it is not performing as per the expectations, how will that money come back? There will be a lot of explanations, answers which may come. How do you handle that? Whether at what point of time you insist that provision has to be made, or there has to be some note in the audit report, either in terms of non-assessment of impairment, and all those matters you'll have to make a considered judgment. So awareness about such problems right at the start of the audit becomes very, very important. Investment in group company loans, group companies is another area. So people do not make real efforts or document the questions which are asked. If there is an investment which is made in a subsidiary, which is a group company or an other promoter related entities, what is the performance of that entity? Do you have the balance sheet? Have you looked at the net worth? Have you looked at the other aspects in terms of making? So those are areas we should focus on, and not only routine vouching, verification and completing, because this may be items which may be legacy issues which may be carrying on in balance sheet for multiple years. But at some point of time, you have to take action. On investments, there are issues either in terms of investment in a listed company. So for example, if a company has made an investment in an unlisted company, now it could be a startup venture, or it could be another group entity venture of a promoter or some other friends and relatives they have invested. Now they may come back and say this investment is early stage, no problem. But are you looking at projections? Are you looking at what is the past performance? What is the expected performance? Those documentation and those questions are becoming more and more relevant now. And in the first year, if they have given you projections, then in the next year, do you check whether those projections are being met or not met? A lot of times what happens is that your investments are there, those balance sheets are not available by the time you are closing your accounts. So these are practical issues which keep on happening. And you may have to insist on unaudited accounts or a trial balance to at least make some assessment that this money is not going to go bad. And at what point of time you need to be more vigilant on some of these areas, that those questions will come about. If bank loans have been used to fund those investments, whether they were part of the sanction letter, whether banks permitted, or it is a diversion of fund, all those questions are also becoming more and more relevant, because bankers are also getting more active when they are asking for the utilization certificates and all those things, or if it's their own investment. Deferred tax is another area where a lot of mistakes happen. People only look at 2 or 3 items saying book WDV, tax WDV, or difference between book depreciation, tax depreciation, or 1 or 2 such items, and deferred tax calculation is done. It is not really taken very seriously. I have seen, especially at the private companies, provision for tax is done, and then deferred tax is maybe a small working is done. In most of the companies I have come across, that the effective tax rate calculation is never done. The concept of tax and deferred tax is that if tax plus deferred tax, you should be very close to the tax rate which is applicable to the company. So for example, if today 25% is a tax rate which is applicable to the companies, your tax plus deferred tax or tax minus deferred tax should be equal to 25% of book profit. So unless and until there are permanent differences like a donation, penalties which are permanently disallowed, or there are certain dividend incomes which are exempt. Earlier it was there, now it is not there. Or there is some ATIIA benefit that you have claimed. Even under ATIIA, deferred tax asset has to be ATJJ, your deferred tax asset is required. So very, very few cases of permanent differences are there. Unless if there is something like a standard deduction in house property or something of that sort, or there is a tax rate difference, capital gain tax versus the normal tax, those issues. But you have to identify those gaps. And then you have to also look at why that tax rate is not matching. Because a lot of times there is a very funny thing that tax rate is 16%, 20%. Now it has to be 25% tax plus deferred tax. So this is one additional checkpoint that we should keep, that tax plus deferred tax should be equal to 25%. So that is one tax reconciliation statement. Under Ind AS accounts, it is mandatory to give a tax reconciliation in the financial statement as a part of notes only. But for IGAAP also the same principles apply. and you can do it as a part of your working paper, so this will give you a good comfort that at least my tax plus deferred tax rate, total tax expense is not going on, even if there are some tax provisions which may have gone plus or minus, because at the time of making provision, you don't know what is the 43B disallowance, or you don't know what is the TDS related disallowance which will happen. Those things you cannot accurately predict. But if the tax and deferred tax is done correctly, then you have lesser of an issue. Deferred tax asset on losses is another area where virtual certainty criteria has to be met. And under IGAP, virtual certainty is the criteria, and virtual certainty is virtually impossible. So in most of the cases, you will never be able to recognize deferred tax asset on losses because it is not practically possible to prove virtual certainty. And because unless there is a contract with a penalty clause and non-cancelable and all those things, you are never able to prove the virtual certainty part of it. And hence, avoid creating a deferred tax asset on the losses, including depreciation losses, unless there is a virtual certainty. And as I said, it is not practically possible to meet that. There has to be a note in the financial statement that you have not recognized deferred tax asset on some of these amounts. On related parties, identification is a little bit of an issue. So there we may have to make adequate inquiries, take a listing from management in terms of these are my list related parties, make due inquiries. It is not that we can blindly accept what they are saying. Documentation of arm's length price is one area where the paperwork is always missing. Very large or organized companies, listed companies, you may have some documentation, but at private limited companies, this is especially missing. And we are making comments in our Caro report that they are at arm's length price. So this is something that we may have to insist. And all these points we have to insist at the start of the audit and not at the end of the audit, because at the end of the audit, it is not possible to do it. Because when just before signing off the balance sheet, you go and tell a client that I need these things, I need these things now, you will not be able to produce. So it has to be done at the planning stage. Some of this risk assessment and identification has to be done at the planning stage. Guarantees given to group companies, securities given to group companies, they are all related party transactions. They all need disclosures. So if I am giving a guarantee to my group company, the loan, if the loan is taken by the group company and we have given guarantee towards that, those disclosure has to be made. And you will have to question the commercial substance also. So why am I giving guarantee to a group company loan? Am I the beneficiary? Am I getting some return for that? Because you are saying that it is an arm's length price and it is not prejudicial to the interest of the company. That is another requirement of Caro also. So those questions we are generally not asking and not habituated to asking. If interest-free loan is given to a group company, it may be permitted under 186 exemption, infrastructure exemption, or any other way. But why interest-free? And what do you do in Caro report? At one point of time, I have seen balance sheets where there are interest-free loans given to group companies, and in Caro we are saying it is not prejudicial to the interest of the company. How can it be possible? Those contradictions we have to avoid, because these are prima facie contradictions. I had seen a recent case where the land of one company was mortgaged. On that, loan was taken by a group company. That group company has gone into NCLT. Now the security is there. Group company has gone into NCLT. What do you do with that asset? Whether you impair it, how is the asset going to come back? How is the mortgage going to be released? Whether you can sell it now. And it gets into a legal tangle. And sometimes as auditors, we do not pay so much attention to some of these type of transactions because they are not even book entries. And this may not be recorded unless somebody has read the minutes very, very carefully. And a lot of times in private limited companies, the minutes may have been made very late only. You may not even realize that such a transaction has happened. Unless a specific question is asked, you may not even know it. And at the last moment, it does not happen. So the team has to be trained that these are some of the basic questions that they have to ask well in advance. That is there any charge? Is there any mortgage? Is the board minutes prepared in advance? At least it reduces the risk to a certain extent. I'm not saying it will eliminate 100%, but you at least can do some due efforts. And these are the typical errors which happen. And at the time when you discover, then you realize that there was no note, there was no disclosure, and now it is a problem. And the client's problem become our problem. Cash flow statements is another area where a lot of struggle happens. I have seen practically in my life, in all the audits, cash flow statement is one area where everybody is struggling. Last moment, everybody is struggling. पूरा balance sheet audit हो गया, sir, cash flow बाकी है. कौन बना रहा है मालूम नहीं. Client is trying to prepare, पर उसे tally नहीं हो रहा है. I mean, at least I have experience, and I am sure most of the people sitting here would have experienced is that it never happens. So now, if you know this is a problem, only one solution is that you have some standard template by which client can fill that, and automatically it can get reconciled. If you are able to automate this, now a lot of technology is available. Excel formulas are available. If you are able to automate it, a lot of time will be saved, especially on the cash flow statements. And some of the principles on cash flow statement has to be, some checkpoints are very, very important, which we generally miss. So for other than operating items, for investment and for financing, you need gross disclosures. It has to be gross payment. Now, typically in private limited companies or even a lot of real estate companies, which may be larger also, there are current accounts which are maintained with group companies. Loan diya, loan diya, loan diya. Continuously, those transactions keep on happening. Now, how do you do a grossing above that? It is an exercise in by itself. It is a large volume that to show a gross figure. And at the last moment, again, you can't do this. So you have to tell them in advance, or some formula you will have to work out. Either you extract the data from Tally or whichever software into Excel and get those gross figures. Otherwise, what happens? It is just one line item, increase, decrease in loans, or loans given taken net. Technically, it is not a compliance with the accounting standard. Exchange gain loss related adjustments, lot of fundamental errors happen, that only unrealized exchange gain loss has to be added back. Now only unrealized portion of that. It's not the full exchange gain loss. Non-cash items have to be excluded. So if there is any ESOP related transaction or conversion of a debt into equity, all those transactions you have to exclude, and there is a separate disclosure for such type of transactions. Taxes paid figure is there normally, but that does not reconcile with the actual tax which has been paid to the government. Now, there has to be some correlation that what is the actual tax, because it is quite possible that you have paid tax, there is a refund also which is received during the year, and there is a netting of which is happening. So normally, typically, while preparing the cash flow, a net figure is there. Now, when that net figure is there, whether it really reconciles with the right picture in terms of what is the tax paid, what is the refund, what are the net balances, are you able to do that? So that is another checkpoint, because while reading the balance sheet, you can definitely get an idea that my tax provision is 100. My tax payment, advance tax, how much you have paid, you know, and what figure is shown in the cash flow. If you correlate these three figures, you will know at very quickly that whether this figure prima facie appears to be right or prima facie appears to be wrong. If it prima facie appears to be wrong or something is there, you have to make more inquiry and find out, is there a refund, is there is anything else which has happened, some asset tax of earlier year is paid in this year, or some demand came of income tax that is now paid. So those typical checkpoints we should keep in mind. In case there are mergers and demergers, and now those transactions are keeping on increasing, the practical implication of those while preparing cash flow is there, because when you do your increase in decrease in debtors and you have already done a merger, those adjustments will have to be made, otherwise your cash flow will not tally. Or if there is a demerger, because there is a separate accounting which has happened for demerger, your assets have gone out, it is not part of your normal operations. They are not part of your increase decrease movements of debtors, creditors, inventories. You may have taken over inventories, or you may have given over some stock outside as a part of those demerger or merger transactions. And there are challenges. So if you are aware that the merger, demerger, or any such event has happened, it will have an effect on preparation of the cash flow. And you have to take that due care, or you have to plan for it in advance that this is what I need to do. These are my templates. These are my figures which I need separately to get this correctly done. And I have seen clients struggle in the night just before the board meeting to prepare cash flows, especially in some complex situations. Whole night has gone by to prepare the calculation, and this has been my real experiences. consolidation of accounts has happened, and in case there are any on cash flow in consolidation also there is challenges. It is not that you can add all the cash flows together and it will tell you. It's not as simple as that. So there proper planning and strategy has to apply. Eliminations which are there, they have to be done in the cash flow also. Proper templates working, because typically everybody does Excel ke andar mein plus, and then at the next year you will not even realize what adjustments you made last year and now you have forgotten that completely. So these are all practical issues which we face day in and day out while you do the audit, and these are all time drainers if they are not addressed and done correctly. Companies Act introduced consolidation for all private limited companies. It was a good move because there are a lot of groups where there is consolidation which is necessary, and consolidated balance sheets really provides a correct picture of the group at a glance. But the awareness about consolidation even today with a lot of people is very, very limited. And the type of difficulties which people face because it is left at the last moment, the consolidation, a lot of challenges or errors, or there are adjustments which has to be made to ensure that it tallies. A lot of time it does not tally also. I have seen some accountants who just come back and told me it is nothing very simple. You have to add everything together, it will tally. It does not. Believe me, it never tallies like that. Unless you have a proper software, because our simple method of adding everything is that you are undoing all the opening consolidation adjustments because you have brought in the standalone accounts again back. And if there are any permanent adjustment which you made in the consolidated, you have lost track of it. So losing track of all the permanent adjustments which have been made in the consolidated balance sheet or entries which are directly made in the consolidated balance sheet is a very big issue unless you have a proper listing, proper JVs which are passed in the consolidated balance sheet, and there is a track of it. You make a lot of mistakes in preparing CFS and a lot of time and energy is invested. And at the end of the, you may say कि थोड़ा difference है, इसको इधर adjust कर दो. These are all practical things which happen, but if you do it in a more systematic manner, that can be avoided. A lot of times the accounting policies may not be uniform across the group. And you don't bring out that issue at the right point of time. At the end, what do you do? If accounting policies are different. Now, there can be technical questions. Can two subsidiaries or holding company and subsidiary follow different method of depreciation policy, WDV versus straight line, whether it is a policy or an estimate? Those questions are also there. Where holding company is following FIFO, subsidiaries following weighted average, whether it is acceptable or not acceptable. It is possible there are different auditors for holding company, different auditor for subsidiary company. Now, if you have to change his method of inventory valuation from weighted average to FIFO of a subsidiary company, and if it is a large subsidiary company, how is it possible? At the end of the audit, how can you change it? It will never be possible unless it is thought at the start, planned, proper discussions have happened, and then only you are be able to get identifying some of these typical points. And that is what I was trying to bring out, that if these are typical points, if you are identified at the start of the audit, you may be able to take some timely action or some proper notes can be drafted, proper views can be taken, which is good, ensuring that audit is done in a right manner. Intra-group eliminations, I think that is fine, but there can be certain transactions, especially where there are profits which are involved. So some of the time challenges happen that my group company has provided services to my holding company, and those are capitalized. So those things are happening. So in one company, it is an income, and in second company, the cost is sitting in the fixed assets or intangible assets. That time, a lot of challenges happen in terms of elimination because they may have taken depreciation, so you will have to reverse the depreciation part of it and all those things, or they may have taken a profit here. So the depreciation on the profit, you may have to eliminate that because 100 rupees may have been billed at 200 rupees and 200 rupees is capitalized. So 100 rupees is the unrealized profit which is sitting there at a group level, and you have to eliminate that and the depreciation also on that, which has already been taken at the holding company level. So such type of typical adjustments are also to be taken care of, especially if there are transactions. So for example, if it is a purchase sale, even if you make a mistake, it will automatically get nullified by itself, and there can be at most a disclosure related issue. But if there is a capital and a revenue related transaction, then there could be a problem. minority interest, non-controlling interest, you should need to have proper reconciliation in terms of what does this figure represent. So in your balance sheet, if there is a minority interest, what is the breakup of this figure? Majority of the time, the breakup of this figure is not available. From where this figure is coming, because it may be coming from yours. Does it really reconcile with the net worth of that entity and the minority share in that entity? If you do a cross reconciliation, whether it matches or it does not match. One of the good methods that you can do while doing a consolidation is, if there are 5 companies, if you total up the profit of all the 5 companies and compare with the consolidated profit, whether it is matching or what are the differences between these two. If you have looked at that differences very closely and say these differences are correct, then in a way there can be a control. So for example, I have seen cases where 40-50 companies are consolidated together and entire working happens in Excel. At that point of time, it is very difficult to keep a control in terms of whether everything is correctly coming or not coming, because within Excel, it is impossible to control everything. So you need to have your standard reconciliations in place to ensure that overall basis, if my 40 entities, this was the profit, this is my consolidated profit, this is my adjustment which I have made to my profit because of intercompany eliminations or margin or whatever reason, and now this reconciles. Similarly, for your reserves, how are my reserves moving from a standalone level to consolidated level? So those statements and those reconciliations, if they are ready, it gives a good comfort to yourself that at least on a macro basis, I do not see you to have made any mistake. Because here, a lot of times mistakes do happen and they are not known unless and until that transaction is reversed. At the time when the actual reversal of the transaction happens, then that point of time you will realize that there is some error which is now crept in. Sorry. So these were some of the accounting standards which I touched upon and some of the practical issues. And in case anybody of you all has faced any other challenges in terms of compliances or had some experiences, very happy to discuss, or we can take that. On disclosures, a lot of times there are accounting standard disclosures which are getting missed out. Some of the common errors I have captured separately. But it is necessary that a checklist is given to the audit team or the article trainees who are actually going to do that audit. And that checklist has to be filled up while it comes for review, so that we are at least broadly sure that the disclosures are at least in line with what are required by the accounting standards. Schedule 3, standard templates people do pick up, but the disclosures of the accounting standards are something which are getting missed. You had a question? While looking at the disclosures, some of the notes are very, very important. Contingent liability notes. Now, the general understanding is that in case there is any litigation which is there, you put as a note. Now, that is not always right. If there is a litigation, you will have to do some assessment whether provision is required or not required. If there is an income tax matter and the department has ruled against you and you are in appeal, then you will have to make more critical assessment that why provision should not be made, because you already lost at one level. At what point of time you will now say, because AS 29 has 3 criteria, whether it is probable, likely, remote. So if it is likely, then you need to make a provision. So always all litigations, just a simple note in contingent liability may not be the right approach. We need to pause, just think, especially for larger amounts, that at what point of time you need to make a provision. There is a disclosure on other commitments which are there, which is there in schedule 3. Now, other commitments, what is other commitments? They require some judgment. Everything is a commitment, but you don't need to disclose that every purchase order is a commitment and I need to disclose everything. But large commitments, unusual items, big commitments, there could be a requirement to disclose. So if there is a commitment to acquire a large capital asset, or there is a commitment to pay a large fee subject to happening of an event, of all those things, those transactions, we may have to put proper disclosures so that the accounts are drawn correctly. Previous year regrouping related errors also keep on happening. We are all aware that we need to regroup, but typically those things get missed out. So this was on the accounting standards. We will go to the auditing standards now, because that is one area where as chartered accountants we have not focused too much. We are all looking at, when you look at the balance sheet, when you do the audit, we are looking at the financial numbers and try and close that. But the requirement of auditing standards have grown substantially from one level to another level. And the expectation of the institute, regulators, ROC, whomsoever, at whatever level, is increasing only on the audit documentation part. So they need what steps you performed, what audit judgments that you took during your case, and they have to be documented. It is quite possible that your judgment may have been, judgment is generally not challenged, but today that is also not the case, but at least it's a judgment. But not documenting on what basis you decided, that becomes a challenge. So if you decided that on this investment, I don't need to do any impairment provision, or on this debtor, I did not do any provision for doubtful debts, although it was 6 months old and there were some indicators. Why did you decide? On what basis you decide? That has to be documented right at that time, and not later on. What management note you will take, what representations you will take. So those have to be thought through little carefully, because that is the way the regulators are now expecting audits to happen. Though it was always the requirement, but it is becoming more and more stringent, and it is getting implemented also very stringently. SQC1 is another area where, especially for smaller or medium-sized firms, this becomes a challenge in terms of implementation, because there are a lot of requirements in SQC1, which talks about quality control procedures, human resources, and your entire peer review form, or the new AQM form, which is there today, substantially is coming out of SQC1. So even in a smaller audit practice, because now peer review is mandatory, getting mandatory for everybody, some documentation on your audit policies, philosophy will have to be made. At least a simple document has to be created. And this is now becoming very, very critical in terms of what efforts you are making to train your staff. How many training sessions did your team attend? These are the type of questions which are coming up. So, did you give enough efforts on training of your team? These are questions which are there in the peer review form also. How many training sessions happened? Do you have a listing of all those? So those issues are now becoming very relevant, especially with audit practices, slightly larger practices. And in case you are signing any listed company balance sheets, then the level goes into 10, in fact. So SQC1, there should be some documentation. We cannot say that we have no documentation. It may be simple, it may be basic, but there has to be some documentation. For smaller firms, one very big challenge is the engagement quality control review. So one of the requirement which the auditing standard has, that there should be 2 people, 2 eye review. So one partner who is involved in the engagement, his work has to be reviewed by another chartered accountant or another partner with the equivalent stature, to see that there are no gaps in his judgment. Now, in a smaller practice, it becomes very difficult to implement that. And even if it is implemented, documenting that is even more difficult. How many questions did he raise? How did you resolve that questions? Now, documenting that is a practical challenge. So some system has to be established, where at least some sign off, some date, where this was reviewed by this person at this date. Some few questions, if there are any, if they are recorded, what was the response? If some of those things are captured, it really helps in your peer review process. And also, in case there is anything which goes wrong with the audit, then you can say that we did our process and then still things went wrong. Because nothing is a guarantee. As I said, you may not realize some transactions which have happened. They have not been informed to you. But still, if you are able to demonstrate that we followed our process, then you may still be able to survive. Engagement letters, we need to ensure that they are there for all the audits. There is a template which is available at the institute also. Now they have come out with a standard template for engagement letter. It is a very detailed engagement letter which they have come out. It's a good template. We should follow and use that. So that template is available and that should be used, at least to ensure that the all engagement letters are there in place. Though not part of auditing standard, but this is very, very important. NOC from previous auditor. we tend to forget sometimes in the gist that there is a new work and we need to complete, but we forget this step, very important step not to forget. And I have seen real practical challenges in getting NOC from previous auditor, especially if the outstanding fees are not paid. This is a very important point that if the earlier auditors outstanding fees are not paid, you cannot accept the audit. And this practically happens that previous auditors fees are outstanding and you are accepted the audit. This becomes a non-compliance from code of ethics point of view, and it is a challenge. We need to be mindful of these challenges. I have seen cases where previous auditor ka fees outstanding hai, PDC de diya usko. No, PDC is not enough. You may not be able to accept on PDC. PDC means still outstanding. Whether check will clear, not clear, it will bounce, we don't know today. So those challenges practically are there. So we have to be just aware about it.
Even our fees are not paid now, that is not permitted.
Yeah, that is not permitted. Next year fees, if they are not paid, that is also not permitted. Very rightly said. So if the March 23 audit fees are not paid and you are signing March 24, that is also not allowed technically under code of ethics. That point is also there. So if you are aware about some of these things, you are able to in fact push the client to say that at least now you pay my last year fees, because I have seen cases where 2 to 3 years audit fees are outstanding. If you are able to show that I cannot sign because I'm not legally permitted to sign, at least that will put pressure on the client to ensure that your earlier outstanding is clear. And awareness about some of these code of ethics and these things are very clear. Because NOC is also a very important tool. If your outstanding are not paid, then you can hold back the NOC technically and say, I cannot give NOC because I am not permitted, and at least ensure that my past dues are completed. So these are all very important tools. Do not miss those. Importance of audit documentation. I mean, lesser, more, whatever you say is less. Very important rule, no audit, no documentation is equal to no audit. Fundamental rule. Now, in today's world, fundamental rule is no documentation is equal to no audit. You cannot say that I had done everything, but I could not write, or my team did not write this. I mean, that is a statement which will never be accepted by any of the regulators. In today's world, it is not an acceptable statement that we did everything, but खाली document नहीं किया. वो नहीं चलेगा, because if it is not documented, it is equal to not audited. So we have to be very, very careful in terms of documentation. Some of the standard tips that you can have for documentation is you create standard templates. This is my planning document template, so that you don't waste time in doing it. Some only few fields have to be filled by the team, and automatically there. Institute has also come out with a lot of standard templates on audit documentation. Planning document, materiality calculation, there is a template which is available. So you fill in the numbers, materiality is automatically calculated. So those standard templates are available. So if you implement some of those standard templates, your audit documentation at least will move from one level to another level. At least the standard templates are available. I have listed down some of the standard templates which are available, and you can also create something in-house. It's not necessary that you only have institute thing. You can create something which is suitable to the type of practice that you are doing, more suitable to it. If something which is very, very exhaustive, we don't need a exhaustive, but at least there has to be some document. It need not be that every small point is covered, but at a broader level, it has to be there. Your work papers have to be retained for 7 years. So that is another very important point. So I have tried to create one slide which shows what is the content of ideal audit file should have. You should have your engagement letter, internal control evaluation. So internal control evaluation is you can have a one pager saying that, yes, we had a discussion with the client. These are the control points. These are my maker checker controls. ये authority matrix है. ये internal auditor है. This is the history. Past history क्या है? No issues of earlier year. These are the software which is used. So one summary, and then based on that, I evaluate the internal control, saying based on that, my evaluation saying it is okay, or this is what is there. Based on that, I do my other audit steps. So if some small document or some small file note is prepared on internal control evaluation, it really helps. Audit planning, there is a standard document which is there. There are a lot of points which we discuss with the management, but we never document it. All queries we discuss with the promoters, director, but we don't document it, what we discussed. If you that minutes of meeting is there, then your matters communicated to those charged with governance at least can be complied. That yes, we discussed these points on this date. Date is very important. Now on all the working papers, date is very important. Do not miss out on the date point. Because most of the times we prepare a document, but it's not dated at all. Then when the review will happen, peer review will happen, then they will say कि भाई ये document आज बनाया कि उस दिन बनाया था किसको मालूम. So dating of those documents, sign off of those documents, they are small procedures, but very important. Typically, when you do internal audit of some other client, we point out all these points. That your vouchers are not signed, purchase order is not signed, this is not authorized, that is not authorized. Same thing applies to us internally also. Those sign-offs, those approvals, those write-ups, we also for our own business have to do that. Letter of representation, there is a lot of times audit happens, but letter of representation is not there. We say next year ले लेंगे, बाद में ले लेंगे, audit sign हो गया. Now, unless you make a discipline that on the day when you sign, ensure that your letter of representation is there, both signed simultaneously. Then things work. Oh, 1 or 2 years, it will be a little difficult, but then it becomes a matter of discipline. Your team understands, your client understands that balance sheet sign होएगा, तो letter of representation भी sign होएगा साथ में. And we have to slightly change the mindset. We have done practice for last maybe 15-20 years, but now way the things are moving, we will have to change. In fact, letter of representation is mandatory even for a certification work. It is done. Engagement letter are mandatory even for certification. So for any small certificate, you need to have a letter, even if it may be a one-page document, saying at least the correctness of the data which they have shared with you. So those are small things which are very important. And if you put it as a matter of practice, as a matter of system, it works. Now, risk of material misstatement is there here. It looks at very big, very complicated paper. No, we actually do risk of material statement in our mind. When you look at the balance sheet, you know, yaar, ye 4 point mein problem hai. That is a risk of material misstatement, then, but only you have to document that, saying that when I saw the balance sheet at the planning stage, I thought revenue recognition में problem आ सकता है, inventory is a critical area, debtors are important area, और मैंने अपने टीम को ये guidance दिया. That is a document which is sufficient at least to prove that you did your risk of material misstatement. Fraud related कोई documentation नहीं होता किसी के file में. Now it is very important that some document is there or some questionnaire is there which you get sign off from the management, especially in larger company, that there is no in relation to fraud, because 143 maybe auditors का responsibility बढ़ गया है. You have a caro reporting which is there. So what audit steps did you do? If you made some verbal inquiry, at least put it that we spoke on this day. These are the questions and this is my understanding. Even if there is a negative confirmation or negative email which is there from our side, that documentation will help you. Because no documentation is equal to no audit, and this is something which is very important. So some of the templates which are there, you can have all these templates, standard templates. If you are doing revenue audit, you can have a standard template in Excel that there is a lead schedule, which will give breakup of revenue. Next sheet, these are my checkpoints. Next sheet, these are my observations, and this is my conclusion. So if that standard Excel template is created, given to team that they fill up all this, then only you can review. So some of these small steps, we have to educate our team, we have to educate our juniors, and then culturally change. Just a minute. So QRB also has a lot of observations on the audit documentation, and this is some of the from the QRB publication only which we have picked up. This is publicly available. So quality control is one of the areas. SQC1 is one of the favorite topic. Even if you look at any of the NAFRA reports, including on the Big Four, independence, SQC1, these are and conflict of interest. These are some of the important points which are coming up in all the audit files continuously. conflict of interest, especially in a smaller practice, also becomes very relevant because it is quite possible that you may be advising on tax, you may be filing the return, you are handling assessment, and you are also doing audit. Now, this becomes a very controversial area, whether it is allowed, not allowed, is very, very controversial. And hence, we have to be careful of where there is a self-review threat, there is a concept of self-review threat, and hence it is very, very important. Yeah. So we have to be careful on that area. Lack of professional skepticism is, sorry, you have time, no? Yeah. So lack of professional skepticism is another area which has been constantly pointed out by regulators. And what I have spoken earlier, that as an auditor, we don't need to investigate, but we have to be careful and we need to be vigilant. There has to be professional skepticism. If there's somebody is saying that this is my loan, I think I will recover over this period of time, on what basis he is saying, whether it is logical, not logical, is something that we need to be questioning, documenting, and whether commercially it makes sense or not is now becoming very, very important. So for example, intercompany loans. Now, why it should be given, why it is intercompany free? Why it should be free? I given guarantee to my group company free of cost. Why free? Those questions are required to be raised by the auditors, and that is where professional skepticism comes in the play. It is very, very important that we be skeptical about certain transactions, certain things. If internal audit report there are points, then we have to take care about that. We cannot ignore some of the points which are there in the internal audit report. And I have seen, or even large reports also, and AFRA reports also have made a reference that internal auditor has said fixed asset register is not updated, but the statutory auditor has not reported in CAR. Now, how do we address that? How do we address those contradictions? Or internal auditor scope is not adequate sometimes, then you have to question that तो साल भर में एक ही एरिया किया, दो एरिया किया, whether it is adequate or not adequate. Are we questioning enough? Group company investments, battery low. Battery of this is low. Plug in करो. Plug करो, charge नहीं हो रहा है. It's coming.
Yeah.
Risk of materials misstatement we spoke about. That is also one of the points which QRB has highlighted, FRRB has highlighted when audit files are reviewed. And we have undergone to QRB, so we know how stringent it gets. So once a QRB file is picked up, they really go into the detail of every small thing also. One, if it is substantially deeper than a peer review, and they get into everything. So that point of time, the documentation, if it is done on time, will save you. Otherwise, my experience is that जितना 3 साल के 4 साल के audit में अपने time डाला, उससे ज़्यादा time आपको QRB को handle करने के लिए लगता है. Because then you have to ensure everything is documented properly, systematically, and whatever time you had not given in 2-3 years back, everything you will have to cover, because to an outsider you cannot satisfy some of these things. You accept clients reply saying कि नहीं आ जाएगा पैसा बाद में, ये हो जाएगा, ये बाद में कर लेंगे, ये next year करेंगे. But same thing you cannot explain it to a regulator. On what basis you do that? It is a very challenging situation sometimes and very delicate situation. So we have to handle it with care, and also a lot of awareness at the time when we are doing it. As I said, planning related documentation is also missing in most of the audit files. Which people did the audit, when they did the audit, who were responsible for what area. I think all those questions are being asked and we have to be aware about that thing. Lot of questions on the SS 700 are being raised. Now, the common thing which is there is that SS 700, either the report is not in the proper format, or one of the very common issue is that people have said that UM दिया ना तो चलता है, कुछ भी हो गया ना तो UM लिख देने का. नहीं, that is not the right approach, because UM is not a substitute for audit qualification, and overuse of UM sometimes is negative. You cannot write a UM saying that gratuity is not actually done based on actual valuation. That is no UM. Either you ensure it is done on actual valuation, you resolve it, or you qualify it, or you find an alternative method saying कि LIC में दिया था वो adequate है, arithmetically करवा के लो, materiality could be another answer, but you cannot just write in the UM. So I have seen audit reports where people write something which is to something in key audit matters, and a lot of other chartered accountants also requested me, client chartered accountant, इसको key audit matter में लिख देते हैं, qualification क्यों करने का? Now key audit matter is very different concept. It has nothing to do with audit qualification. It is identifying what matters were important and how did you audit that. It does not mean that you can write a qualification there. But commonly made mistake. That एक बार UM लिख दो ना, अपना responsibility खत्म. It does not work that way. In fact, responsibility doubles. Because you are indirectly highlighted also and saying I did not do it correctly. So वो चार finger अपने पे point out होता है उसमें. So be very careful where you want to do UM, where you want to qualify. And if you are qualifying, the terminology, the amounts, quantification, the accounting standard which is not complied, all those needs to be also captured. But blindly giving UM is a practice that we should avoid. For every small thing, people write UM. Debtors provision, we have relied on management. Balance confirmation, nahi mila. There is a note in the auditor's report. Accounts, debtors, creditor balance are subject to balance confirmation. Now you cannot write like that. Notes to accounts में note लिखने हैं, balance, debtors, creditor balance are subjected to confirmations. You cannot write that statement only. Because if they are subject to balance confirmations, how did you complete your audit?
Certified by the.
I am coming to that. Inventory as certified by management. You cannot write that statement only. Because if then you have not done audit, you are just reproducing what is given by management. So that is again a problem. So some of those statements have to be avoided. If balance confirmation of a debtor is not available, what alternate audit procedure do you do? You said we say subsequent payment. 31st March को 5 crore outstanding था, अगर अप्रैल में पैसा आ गया, so there is no need for balance confirmation because money has actually come. Blindly writing those statements is not going to help anybody. And those statements are continuing from years together. Sometimes even the statement like previous year figure regroup wherever necessary also is harmful. कितना regroup किया, क्या regroup किया, किसको मालूम? So some of these very standard statements, standard practices, we need to revisit. We need to be careful because the expectation is that otherwise your audit is not complete. Either you conclude, you need to conclude. You cannot stay in between. You conclude that it is okay or you conclude it is not okay. Staying in between is now not an acceptable position. So audit report, we have to be careful. Formats are available on the in standards only. The formats are available, but we have to be very careful with the choice of words, language, what we use. Another standard error happens in the other information or the management information which is there, like director's report. There is a paragraph there. Now, a lot of times you don't even read the director's report and we say we have read everything. You have signed the balance sheet, but director's report is not prepared. And we write that we have read management information and we have nothing to highlight as regard to this. There's a standard reporting paragraph. Now, it is possible that in the accounts you have made a qualification that there is an under provisioning of interest. And in the director's report, they have given net worth calculation, they have given the interest figure, and they have given the profitability figure. That information is also wrong to that extent because of the audit qualification. But we do not capture that. In the auditing standards require you to capture that the qualification which is there, other information which is there is also misstated to that extent. That is also required to be given if there is an impact. Because especially in listed companies, what happens if there is a qualification and you are in the management discussion analysis, you have your ratios. Yes. Yeah, but you should read it before you sign. Draft report has to be read before you sign. Practically तो बाद में बनता है वो मेरे को भी मालूम.
Otherwise also because director report is to say what is the point.
Yeah, so auditor's qualification का reference भी तो आता है ना director's report में. So theoretically you have to be careful. Yeah, it is quite possible नहीं. और सर उसमें भी एक और challenge होता है कि consolidation आज sign किया, standalone आज sign किया जून में, consolidation सितंबर में sign करोगे तो director's report कभी बनेगा? It may happen in September. You may not have even read it. So there are cases where you have two different board meetings for signing of two different accounts because standalone is completed, you signed it. If there was a board meeting, standalone accounts are adopted. Console is not adopted. Console is adopted in a separate board meeting, and then there is a AGM. So you have to be careful about some of these situations. And these are practically happening day in and day out. Checklist. These are some of the practical tips. I have spoken about it earlier also, that using checklist is very important. And standardization of template. There are software which are now available for audit documentation. Some of them are not very expensive, where all the standard checklists are part of the software, where you can do it through the software. So if possible, some of the simpler softwares, if we can implement it, that will really sort out a lot of simple, at least simple documentation issues will get sorted out. And now there is no choice but eventually to implement software, because manual paperwork is not possible because it has become very, very cumbersome, and you cannot even monitor it. How much is done, how much is not done, how much will you rely? You may be signing 100 balance sheets in a year, at least. A lot of people, at least 100 balance sheets maybe people may be doing 50 to 100 at least. Now, how do you know that for all my 50 balance sheets, 100 balance sheets, everything is complete? Typically, paperwork is always pending. It is our own mindset which is that way only. So that discipline will come if there is software. You will get at least a report saying कि ये file में इतना pending है, ये file में इतना pending है. So at least you can take some action. Some timely action can be taken. So we'll quickly look at some of the Companies Act related issues which come when we are finalizing the balance sheet. 185, very typical section which is there. Initially, it was very stringent. Then it has become relaxed because for group company loans, you can have special resolution and it has to be used for the purpose of business. Loan given to director without, unless it is part of a policy, and those becomes a problem. But typically we have to be careful. Here also there are transactions I have seen where people don't realize that there is a 185 issue. So the case which I was saying, if I have given my security asset as a security for loan taken by a company which is owned by my director or having common director, there is a 185 issue because it is an indirect loan when I'm giving my securities. If my assets are mortgaged, there is a 185 issue. But typically it does not get highlighted. We tend to miss those type of points. We need to highlight it to the client also, saying this is a risk that you are taking. It is a non-compliance. And there are penalties which are there for the non-compliance. There is a CARO reporting which is there for this issue. So we have to first identify those type of problems. Because when the work is there, it happens at such speed that our focus is to complete and ensure that sub due date meet ho jaye. But while doing that, we leave a lot of risks which are open. And in the first year or the first couple of years, if you have not pointed out, then it becomes a legacy issue. Then you say, "Abhi to 3 saal se nahi kiya, abhi kaise karunga?" It is impossible to resolve that. It's a vicious circle. So not being aware is a big problem. If you're at least aware, if you have brought it to attention, then you know there is some solution can be found out, some resolution can be done, some rectification can be done at a timely manner. So as I said, there is a penalty, there is imprisonment. So 185 is a common area of mistake which is there in a lot of small companies, medium companies, even in fact some of the larger companies also. So we have to be careful when those intercompany loans are there. We need to look at 185, we need to look at 186, we also need to look at public deposit related matters. So if there are 3 or 4 areas we need to keep in mind very clearly, if there are intercompany loans, these 4 things should come in mind. At least ensure that. 186 is another area where things happening, the limits calculation, board resolutions, special resolutions. 2-layer companies generally is not an issue so much. There is a disclosure under 186(4) in the financial statement which is required, that the loans and investment, how they have been used, the purpose for which they have been used, there is a disclosure requirement. Many financial statements, the disclosure requirement is missed out. Many financial statements, the disclosure is missed out. The interest rate, whether it is as per the government or not, another area where we don't really check. वो 8% है तो बराबर है, उसको मालूम. 7.5 बराबर है, नहीं मालूम. 9 दिया, 10 दिया, क्या मालूम? What is the right interest rate? I don't know. Do we check with the bond rate? Generally, we don't. There are certain exemptions which are available from 186. NBFC companies, infrastructure. There are opinions that even in real estate, you can take their opinion that you do not charge interest. Most of the real estate companies are taking this view that intercompany loans can be interest free because it is covered by the definition of infrastructure and they are taking the benefit. There are opinions both ways, but still there is an opinion and a view which is there across industry. But even though it is interest free, but you will have to still question from the fact that why it is not prejudicial to the interest of the company. I think that is one of the very important questions that we need to keep on asking, that why it is not prejudicial to the interest of the company. Because in your CARO, you are saying the terms are not prejudicial to the interest of the company. So if I have given an interest loan to my wholly owned subsidiary, I can justify saying ultimately consolidated, I am the owner. I am giving loan to myself, fine. But if I have given loan to a joint venture partner and not charging interest, is it that other joint venture partner is also giving interest free? Both our promoters are giving interest free. Maybe it is fair. But other promoter has not contributed and I am doing, is there some commercial arrangement or in future I am going to get more profit share? Is that the understanding? Maybe then it is fair. But those questions have to be raised. You have to ask those questions. Today we are not asking those questions. That why interest free? Because then how do you report in CARO? We can just not directly say that it is not mutual to the interest of the company. Because I am giving my loan, I am giving my money, I am losing. There is a benefit for opportunity cost which is there, which I am not using. There is an interest which I may be paying to the bank on, and there is an interest you don't give given outside. How do you match that? And 186 also there is a CARO reporting requirement, so we have to again be a little careful. There are penalties here also. So when many times when there are accounts which are coming for due diligence, I have observed that in most of the private limited companies, non-compliance with 185, 186 is there. Another typical area where we have a lot of responsibilities and issues are there in terms of public deposit, section 73, 74, the limit and all those things. But more than that part of it, if there are loans which are taken from partnership firms, how do you deal with that? Are all partners shareholders, or is it allowed, not allowed? Loans from LLP, loan from trust, if there are any individual loans, if there is loan from director, whether there is a declaration that he has not taken from borrowed funds, all those points, we are all aware about it, but we need to be meticulous enough to ensure that these things are done, taken care, so that the reporting in CARO or from any other angle, because these are all sections which are very, very important from an audit point of view, especially private limited companies. These typical points we need to be careful. CSR related is another area where there are disclosures, calculations. CSR calculation is similar to your manager remuneration calculation. Manager remuneration typically I have not taken right now because most of the private limited companies, it may not be very relevant. But CSR again, if you are handling a client before March, if you are able to tell them that this is my CSR requirement, this is what is to be done, because by March, if they have not paid, then there is very little option. Either they have to give it to the CARES fund, or they may have to put it in a special bank account for a project, because there are the only two options. The spending has to happen by March. Utilization is also required to be done. It is not just I pay the money to the trust. Trust is supposed to utilize it also. Then only it is counted as utilization. So as an auditor, you technically need the utilization certificate also, that I have given the money and they have utilized. Just giving money is not enough. So on 31st, I just write a check saying that this CSR is done. It may not be possible because he cannot use it only on the same day. So these are again areas where we have to be little more careful. Which reimbursement? Kiska? That is fine. Then it is utilized. That is okay. But then that certificate trust will have to give you that this is towards what I have spent earlier. But unless you ask that question and ask for the document, you will also not know. And in a lot of times, the trust is owned by the promoter, or it is a group trust, their own trust. So there those challenges keep on coming, and the entries are happening only at the year end. 31st March को याद आता है CSR भरने का है. So that becomes a problem. So awareness, maybe doing it in advance, doing it at the right time, is very important. And these are areas where you can also add value to your client. If you are telling him in advance that ये CSR का है, अपने को 3 महीना पहले बता रहे हैं, so then he may also recognize that you are adding value. You are not just a compliance checkbox. That audit के time में बोला ये नहीं किया, लेकिन पहले अगर आप बोलोगे, so it adds value. You will be looked at in a very different perspective that you are adding value. आपने मेरे को पहले बताया ये problem होने वाला है. So that also helps. That if you are able to change your hat and saying that now these are the problems which are there. I did some interim review. These are 5 problems which we expect in the month of March to happen. Let us resolve this in advance. If we do that, some of the audits will get closed satisfactorily, especially where the promoters have the right mindset. Schedule 3 disclosure requirements. I think this is now stabilized. Multiple years have gone by, but some of the areas where some problems are happening is on the promoters front. Who are the promoters? Identification of promoter is also very important point. And a lot of times accountants don't take care. Shareholders का नाम लिख देते हैं. Annual return के साथ में मैच नहीं करते. Annual return में किसको promoter बताया. And we have seen cases where promoter का नाम गलत गया. Now maybe in some other transaction or from some other perspective, this becomes relevant. That I don't want to be the promoter of this company, but my name is appearing as a promoter. I may be a director or some shareholder, but actually other party is the promoter. Those issues come up because once it is disclosed in the balance sheet as promoter, then you cannot retract. And practically I have seen cases where saying यार मेरा नाम promoter पर I am not promoter. खुद promoter आके बोलते हैं मेरा नाम क्यों लिखा इसमें? किस बेसिस पे लिखा तुमने ये नाम? Because nobody has paid that much thought only because ये disclosure requirement complete करने के लिए जो भी फटाफट ध्यान में आता है लिख देते हैं. But promoters, it's a sensitive point. It can create a problem. Receivable and payable aging, another area where there is a problem. Practically, people may take a lot of cost because bill date से लेने का, due date से लेने का is a messy problem. Everybody is doing whatever they feel like. क्या right है क्या wrong है मालूम नहीं है मेरे को. Loans and advances, that there is a disclosure that it is not end use related disclosures. जो Companies Act audit report में भी paragraph है. There is a corresponding paragraph there in the schedule notes also. There also those standard paragraphs are getting repeated. What audit procedure we did, nobody knows. So there is an implementation guide where there is a letter or the confirmation to be taken from the person to whom you are giving loan that they are used for business purpose and it is not, they are not given it to some third party or it is not under instruction to be given those. There is a format which is prescribed by the institute in the implementation guide. So we can use that standard format and get those confirmations at least. There is a standard format which is available to do that. So especially where there are large intercompany loans, we should do that. Disclosure pertaining to undisclosed income, it can come as a challenge in case there is a block assessment, search, all those areas, those time be careful. Or if there are some negative assessment orders which are getting passed, and in those assessment orders, something is written, be careful with what is written in that assessment order vis-a-vis what is you are writing here. In case there are search proceedings against your client, some of these things can be triggered. I'm not saying necessarily it will be triggered, but you have to be aware that we'll have to ask this question: how do you write here? Relationship with stock of companies, as an auditors, we generally rely on client जो list देता है ले लेते हैं. We do not do much checking, but थोड़ा check करना चाहिए. Sometimes I have seen 1 or 2 cases where relationship में balance दिखाया, closing balance, receivable. अभी stock of company का receivable है तो provision करने का भूल गया, write off करने को भूल गया. अभी वो stock of company है तो पैसा तो नहीं आएगा ना. But from there you realize that इसमें balance है, we have not made provision. So you need to reference that. If you read something here, whether it is provided, not provided. Otherwise, typically again, issues can come up. Documentation on this capital work in progress, aging schedule is very poor. Most of the cases, private limited companies, you do not have adequate document की budget क्या था, budget से बड़ा नहीं बड़ा, because those comments have to be made in case for delayed projects. In case there are old projects, you have those disclosures are required, but backup papers are not available. So we need to be aware that if there is some case, think in advance, decide in advance. Another area where even I was attending one of the regional seminar and ROC representative was there. They are saying that the reporting by chartered accountants on these areas where whether the loan statements which are given to bank, whether they are correct, not correct, whether they match with the books of accounts or not. That has come because they have found a lot of discrepancies of what stock statements people are giving to banks on regular basis and what is right. And there are a lot of issues at bank level for NPS and other things, and that is why this reporting requirement was brought in by the government. That there has been complete misreporting, if I may use the word, in that area. And hence that reporting requirement is now we have to be very careful. Because if there is more than 5 crores, the quarterly stock statement which are given, they do not reconcile with the books accounts, please report. Or ask clients to submit revised statements if required, because those becomes very, very critical from a banking point of view, loan point of view, NPA, DP calculation. It is a very relevant point from their angle. And in the past, they have had very, very bad experiences. Hence, this reporting requirement was brought in specifically so that if now there is a non-reporting in this area, auditors will also be held responsible. That now why are you not reporting? Utilization of borrowed funds, another area where we have to be very careful. Most of the issues, if you look at even NFRA orders or any other things where it has gone by, utilization of funds is something which is where your responsibility is very, very high. That if there is a loan which is taken from bank, if it is not utilized for the purpose, please be very careful of what documentation you are having, what reporting you are using, how it has to be handled, because that is a very, very critical area and we cannot miss on that part of it. So here the senior level involvement is necessary to ensure that we don't miss on any of those parts. Some of the commonly observed errors we will quickly run through where the format is not correct or the nomenclatures are not correct. This is what it is pointed out by the institute, common errors which are there. So here if you see on the non-current assets, we start with tangible, intangible under development and then intangible assets. The format is not that way. Format is property, plant, equipment. It is not tangible assets. The accounting standard name has changed from fixed assets to property, plant, equipment many years back. That change also has happened in the schedule. So it is property, plant, equipment. Some of the terminology, because these are financial statements, these are legal documents, those terminology which are there in schedule 3 are very important, and some of the sequencing is also very important, at least the flow. Related party loans, whether they are secured or not secured, that disclosure is missing. That is also which is required disclosure. So for all loans, even if it is related party loan, doesn't matter, but you have to mention it is secured or not secured. So secured or not secured word is very, very important. breakup of investments, whether it is subsidiary, associate, joint venture, equity, preference, trade, non-trade, area where mistakes are happening, mistakes are found. So if there are checklists that you are using, please update that. Mismatch between the figures which are there in the closing balances as per financial statement versus related party. The related parties closing balance don't reconcile with what is there in the financial statements schedules. So that mismatches are also a common error, because maybe related party statement is made at the end, it is not verified fully, or some other thing has happened, but those figures don't, or you make one change in the entry in the financial statement, but you do not update the notes. So these things happen. And these are common mistakes because at the last moment things happen and where you tend to miss out. Cash balances is one area which is typically ignored because of 3 or 4 items which are there. Escrow balances. If it is an escrow balance which is there, you need to highlight this is an escrow balance not available for use. Or if there are foreign bank accounts, whether the money is repatriable in India or not repatriable in India. What are the guidelines for those foreign currency accounts? Or if there are problems with that nation, whether the money can come back, not come back. Lot of times overdraft balance is reduced from cash and bank balances, but correct position is that it is part of loans. So on the cash and bank balances, what is available for use? Because cash balance is a very significant figure. Maybe in audit we don't realize, but from an investor point of view, they will look at what is the cash balance available or what is the bank balance available. Now, if the bank balance available shows that there are FDs which are against lien, they are not usable for business. So that cannot be part of cash and bank balances. So what you show in your cash flow statement, what you show in your cash and cash balances, whether they reconcile, don't reconcile, whether they make sense from a commercial point of view, from a legal point of view, need to just apply the mind at that point of time and see. GST input credit, whether it is current, non-current, that is also required to be done. It is quite possible in an inverted structure, you may not be able to utilize everything in next year. So blindly, GST input credit shown as current is not correct. You have to apply the mind. Income tax also, netting off year to year, it should happen. It is not that total balances can be netted off, because the legal right is only for the year. So if assessment year 22-23, advance tax can be netted off against 22-23 provision for tax. As an SSC, we do not have right to net off against any other tax liability. So the netting off has to happen year to year and not at a gross level. Borrowings also, a lot of times, many disclosures or care which is not taken is either the security details are not properly mentioned. If there are guarantees or collaterals which are given by promoters that are not getting captured, or group companies, or I have seen cases where loan is taken and it is secured, their security is the collateral of the promoter, and we show as a secured loan. No, it is not secured loan, it is an unsecured loan, because company's assets are not mortgaged. Only if company's assets are mortgaged, it becomes a secured loan. So we have to be careful about secured, unsecured. In fact, if the value of the security reduces and you are signing off on the balance sheet, then to that extent the loan becomes unsecured. So if you have taken 100 rupees loan and you've given some value against shares and the shares value has dropped, to that extent the loan will be unsecured. So from a banking point of view, these are important points. Lot of time that care is sometimes not taken to evaluate some of these data and see whether it is secure, not secure. Because we just see that the security is given, so it is secure. But it is quite possible the value of security may have dropped. Repayment terms, rate of interest, those notes have to be carefully drafted.
In case of shares, it will be value as of 31st March 2023 or no year?
Sorry?
In case of shares, you have to see the value as of 31st March.
Now you are signing as of 31st March. So as of 31st March, so definitely you have to see.
But throughout the year, there will be a lot of.
Throughout the year, there will be. But normally from a bank point of view also, they should also have taken care. But now at least on 31st March, if you are signing off and you see the value has dropped, then to that extent it will become an unsecured loan. At least as on that date. See, balance sheet is as of that date. So you are signing as of that date only. So to that extent, you are not responsible for what happened during the year. But during the year, if it was unsecured and the sanction letter required something to happen, or it triggered event of default, then you have to take care. Lot of times what happens, there is a delay in repayment. Now delay in repayment could trigger event of default. Guidance note talks about minor events and major events. That if there is a minor event and the history of that banking practice is not that they will not call back the loan, then you may still show it as non-current loan, especially on the current non-current side. So if there is a non-current loan and there is a non-compliance with the sanction letter, so either change in shareholding or intimation or sharing of some details, and there is a triggering of an event of default, then on those cases you have to take care that this event of default, whether I can still show as non-current, or there is an example where two installments have got delayed or defaulted. Now that becomes a trigger, or it could be event of default. Now, can you show the balance loan as non-current? Or you have to now show entire loan as current. See, because the moment you show entire loan as current, the entire balance sheet picture will change. Current ratio will go for a toss. In fact, from a banking point of view, it may be a big problem. But not doing that, you may be in a big problem. So on borrowing side is another area, especially where there are large borrowings, a lot of care has to be taken. Independent balance confirmation is something which is a must from the bankers. There's some of the trade payable related issues which are typically there. I think we can go fast. Nature of provisions not being disclosed. Bifurcation between current and non-current. So some of these are there, they are part of the PPT. I think we can skip some of these. Cross-referencing not done, corresponding previous figures not disclosed, contingent liabilities not disclosed or not mentioned as nil. Even if you mention as nil, previous year figure has to be given. Sin, din, all those things have to be taken care of. Interest on statutory liability has to be grouped under finance cost and not under that head. So if you pay GST and interest on GST, it is not in GST. It is not rent rates and taxes. It is interest. It is a finance cost. Interest on delay in payment of advance tax is finance cost. It is not provision for tax. Lot of times interest provision for tax में जो figure जाता है including interest डाल देते हैं. But the interest portion is a finance cost. So I think this audit trail we will cover. I have 10 more minutes. So I think audit trail it is important for this year we can cover. Because there are a lot of challenges as far as audit trail is concerned. Typically what you need is who, when, what. Who made the change, when the changes were made, and what the change was made. I think this is the three things that you need. The definition restricts it to books of accounts. And now what is a books of account is a very open wide definition. So that you have to be clear in your client, what is the books of account? Whether any software which is integrated with your system, whether it is a books of account or not. So because a lot of times you have an operating software where you do some working and automatically figures go from there into your accounting system and automatically billing is happening or automatic accounting is happening. Hotels mein hota hai. Where you have your POS system at the restaurant, उसमें जो bill बना automatically main system में जाके reconcile हो जाता है. For purchase, you may have a separate software. Inventory, you may have a separate software, and they get integrated. So whether those other periphery software also part of books of account or not part of books of account, that is one area where we have to be careful about. So it is not only the main books of account; it could be other areas also. This is not applicable to entries incorporated outside India. If Companies Act is not applicable, and books of accounts are maintained manually, so mostly it is applicable to everybody. Even small company it is applicable, even small company. So this is a standard reporting paragraph, which is given in the guidance note. So you can refer to the guidance note. The retention paragraph, most of the auditors have taken the view that even they are reporting in the first year also saying that the retention is not applicable. We started this practice and everybody is reporting that the preservation is also applicable from next year. This is specifically mentioned because you have to also comment on the preservation of the audit trail. The first year preservation cannot be there. From next year you have to comment कि last year का audit trail भी है कि नहीं. So next year there is additional care to be taken that पुराना audit trail भी मिलना चाहिए मेरे को. ऐसा नहीं है कि ये बार देखा खत्म हो गया. Audit trail cannot override itself. So if there is an audit trail which is overriding itself and I get only the last changes, then it is not for audit trail. पुराना मेरे को preserve करके रखने का, it becomes like a books of account. I need to preserve that for 7 years. So this is something which is maybe little tedious, थोड़ा silly भी होगा, problematic है, but it is required.
So where is the reporting requirement? Which part of the audit report?
Main audit report.
Main audit.
हाँ, main audit report. जो other rules regulation वाला जो 5-7 पॉइंट आता है ना, उसके साथ में ये है. So the standard paragraph you will have to draft so that it gets incorporated in all the audit reports which are issued for this financial year. So we cannot miss out on that part at least. This is some of the FAQ which is there as a part of the guidance note, which revised guidance note in March, which was issued. There were 2 guidance notes. First one was issued earlier, then it got amended in March. Another guidance note came and it gave more clarity and also opened up few Pandora's boxes. Also, this guidance note has also opened a few Pandora's boxes. So as I said, no exemption for small and medium companies. If you're doing limited review, then there is no requirement. If there are technical glitches, then also you will have to report. If you are using an expert, then it has to comply with the auditing standard on 620 use of experts. If the audit trail is not there for throughout the year, this is there in many of the clients that people have missed out from implementing this from 1st April, especially smaller cases. People have started it later on. जब अपन ने याद दिलाया तभी से शुरू किया. Tally patch नहीं लगा था, 10 दिन waste हो गया. All those issues are there, but report it. And if client is resisting, there is a compilation of the auditing reports which are come, or many listed companies. In most of the large companies also you have find there is a note on audit trail or there is a negative remark on audit trail. It is there in TCS, it is there in Verico, it is there in many large companies. So you can give that reference to your client. There is a compilation also which is out that ये कोई नहीं है, बड़ी company में भी problem हो रहा है. So it is not that when I report to you, I have to report. Everybody is reporting, we have to report. So that is something you can show it to your client. Otherwise, there will be some resistance. People will say, why are you writing? So those examples or the compilations which are there, you should write. You should at least read through some of those. Very large companies, if it is there in TCS, which is a software company, तो फिर सब में हो सकता है. And people have gone to a very different level here also, because people have gone from saying के transaction का edit हुआ कि नहीं हुआ. Now from there people have gone to masters. From masters people have gone to the database. A database in like software like SAP, Oracle, and all those things which are not sometimes within our control. So, but उसका database का audit trail very even difficult to understand sometimes. If you are not an IT professional, you will not even understand वो क्या बोलना चाह रहा है. और कौन से transaction का, कितने transaction का चाहिए. So it has got expanded to a very different level. Maybe the intent was very limited to books of account, but they have taken it to the database level. That जो main database है, source data कहाँ पे है SAP में. तो source data के rights किसके पास है? Who can edit the source data? किसी के पास admin rights हैं, तो उसका क्या?
So the source data is my books of account only.
No, but that book,
That is lying.
yeah.
And from there only my books of accounts are getting generated.
Once
That
entry is,
part of the books of accounts.
that
I
is-
need to see the audit trail.
you will see that. But when we are talking about the database, so once that the process is within the software. So for example, software will be doing inventory calculation.
Correct.
वो inventory calculation का method किसी ने जाके change किया तो उसका audit trail है क्या?
I think so they should be,
But
we
this-
should look at that.
You should, but they are expanded, but it is very practically it
Go
becoming very
one step
difficult.
ahead that we have to even dispose of that audit trail. Not that whether the audit trail is maintained or not, but as an auditor, we need to dispose of also. Like if there is a modification, whether it has affected my 2M fair view.
अभी तक वो responsibility specifically नहीं डाला है,
No,
but है.
but that is inbuilt, actually.
Yet you are right, it's inbuilt.
But
But it has become very difficult.
I have just looked into this audit trail and as an auditor, I am seeing there is a modification, but I am not asked any question. And where is the control related to that modification?
You are right,
I am not asked that question, I am responsible.
you are right, but
So we
enough.
are restricting ourselves only to the audit trail, but we are not going beyond that.
But ये-
Actually speaking, it is inbuilt that.
वो पहले से था सर, वो आज का नहीं है, वो पहले से था.
Yes, पहले से ही था.
But see, fact that now you have to see, there could be alternate control also.
Yes.
But we have
That is
to,
how we have to dispose.
we have to dispose that issue with through alternate control. But now वो उतना आप dispose कर पाओगे alternate control को देख के. But लोगों का आर्ग्यूमेंट क्या आ रहा है, मेरा सेफ सिस्टम में तो मैं एंट्री एडिट डाला, उसके बाद एडिट होता ही नहीं है. अब एडिट होता नहीं तो उसको ऑडिट ट्रेल किधर से लेके आओ, मेरे को बताओ आप जरा. If I cannot edit the entry, how can I get a report of audit trail? Can you report now?
नहीं आएगा.
नहीं आएगा.
You have to do modification, it will be in the books of account only. Where itself is
वो
available.
तो जेबी आएगा, उसका
Reversal is there.
रिवर्सल एंट्री आएगा,
Manual.
मैनुअल में आएगा. कैसे करोगे आप इसका ऑडिट ट्रेल? नाउ इंस्टीट्यूट इज सेइंग यू शुड हैव अ रिपोर्ट ऑफ ऑडिट ट्रेल. कहां से लेके आऊंगा रिपोर्ट आप?
And I've seen in Tally, I think the audit trail is transaction wise.
वो फिर भी समझ में आता है कि एक बार चलो ट्रांजैक्शन वाइज है, 100 ट्रांजैक्शन है तो आप देखो एक बार. बट विथ लार्जर सॉफ्टवेयर द प्रॉब्लम इज बिकमिंग मोर कॉम्प्लेक्स.
Yes.
Problem is become more complex. I had a client, 5-star hotel, where there are 5 softwares, international brands. It is not controlled by Indian people only. It is controlled by somebody sitting in Hong Kong. वो उसका IT हांगकांग में देखता है, कहीं तो और देखता है, वो सॉफ्टवेयर उनके कंट्रोल में है. यहाँ किसके पास कुछ राइट्स ही नहीं है. नाउ टू फाइंड आउट फ्रॉम देयर कि भाई इसका ऑडिट ट्रेल दिखाओ, उनको समझाओ, वाज अ हेडेक. You can't even get that data. It is creating. Now it will go, sir. आप बोल रहे हो बराबर है, but 5,000 करोड़ की कंपनी में क्या क्या देखोगे आप? In your time frame of doing the audit, where you have board meeting on 30th April, आप कितना ऑडिट ट्रेल देखोगे जाके, और कितना जाके चेक करोगे कि ये इसमें क्या क्या हुआ? Thousands of transactions will happen, sir.
Actually, we need system experts.
You will need lot of IT experts, especially in a complex NBFCs में, banks में. There are so many things which are happening, you will not even know. KYC में कस्टमर मास्टर में किसी का अभी टेलीफोन एड्रेस चेंज कर दिया, उसका भी कितना कितना तक जाओगे आप? At what level you will stop? Because as you said, you can expand it to anywhere. So you have to put some full stop, but there is a guidance note which is there. So some problems are going to come, maybe over a period it will stabilize, but first year there are definitely problems. But the only thing is you have to be aware of what is the problem and what risk, what call you are taking. So this is there. So if you are relying, if you look at cloud-based software, people are saying there is a SOC1, SOC2 report. They are given by the software vendor. उन्होंने अपने सिस्टम को ऑडिट करवाया है, उसका ऑडिट रिपोर्ट देते हैं आपको. उसमें सिस्टम के कंट्रोल्स के ऊपर एक ऑडिट होता है, इंटरनेशनल प्रैक्टिस है. तो whether that report is adequate, not adequate, but वो आप देखो, then you have to take a judgment. Right? Software fails to retain audit trail, तो क्या करने का? Because there are so many software which are available, there are no standard software. Every software is functioning very differently. तो स्टैंडर्ड आंसर्स नहीं है कहीं पे. ऑडिटेड रिक्वायरमेंट है डेटाबेस लेवल. ये जो है ना, यस डेटाबेस लेवल, दिस इज वेरी वेरी कॉम्प्लिकेटेड. आपको तो बाहर का रिपोर्ट देख रहे हो ना, उसके पीछे क्या हो रहा है, किस कौन देख रहा है?
I think that every company that put this, that audit trail at the database level is not.
A lot of companies have put this, yes. It has come in many reports. So this was the change which came in the last guidance note, and this has really expanded the scope of this checking to a very different level. So I was saying, if there are multiple software, there are a lot of challenges. 4-4, 5-5 software से data आता है. Today it is happening. Fintech companies में हो रहा है sir. If there are fintech companies में, there are cases where there are companies which we are giving loans on mobile app, बराबर है? तो सॉफ्टवेयर ही डिसाइड करता है मेरा लोन का रेट क्या है. वो KYC ऑटोमेटिक करता है, अपने आप लोन डिस्बर्स करता है ऑटोमेटिक, नो ह्यूमन इंटरवेंशन. आदमी देखता ही नहीं, उसको अपने आप लोन जाता है. नाउ इन सच केसेस उसका ऑडिट ट्रेल देखना, व्हेन देयर आर लैक्स एंड थाउजेंड्स ऑफ ट्रांजैक्शन, इवन उसका डेटा टर्म एक्सेल में नहीं आता है. So that you have to have the right technology to handle those type of questions, right understanding of IT system. So this is a challenge. We will have to understand the IT system a little better, or you will have to have 1 or 2 experts who are able to help you in some of those areas. Very necessary. तो TCS में डेटाबेस लेवल का आया. TCS के लेवल पे डेटाबेस लेवल का आ सकता, तो मतलब सब क्लाइंट में आना चाहिए. Marico certain subsidiaries did not have. HDFC Bank audit trail feature was not enabled throughout, therefore certain masters into accounting software for database. In respect of aforesaid data master, the absence of audit trail, our question of commenting is not there. They have also mentioned this, and there is a compilation. There are 150 ऐसा companies का compilation available है.
From where we get the compilation?
है ना, वो अपना institute का ही आ चुका है.
Issue का है?
हाँ, available है, publicly available compilation. So I just highlighted 2 or 3 here, but otherwise if you go through, you will see many varieties. So if some of these varieties you can use some appropriate language, some judgment. If you want to do that, this will be helpful. In days, I think we can skip now. एक है time अभी 2 minutes. So we will go to this just last this new amendment 143BH. I think if you want to do quickly, MSME वाला है. Micro, small disallowance in income tax, though it is more from a tax audit point of view, but from making provision for tax also it is little relevant. And by doing audit at the point of time of audit also, you will have to look at what are your MSME outstanding, non-MSME outstanding, balance sheet में जो disclose कर रहे हैं vis-a-vis what is going to happen in your tax audit, वो दोनों में marry करना जरूरी है. Otherwise there will be a discrepancy between what is there in the balance sheet, what is there in the tax audit report. When you do the tax audit report, बोला है तो MSME भूल गया उधर disclose करने का. So all these issues will come about. So you have to be careful when finalizing the balance sheet, especially if it at different dates. थोड़ा care लेना पड़ेगा. Whether client has procedure case identification of MSME बराबर हो रहा है नहीं हो रहा है. Whether in tax audit you will put some note. In financials there is some note generally which is given saying that this is based on information which is available with the management of people who have informed to me that I am MSME. If the vendor is not informed to me I am MSME, then how do you know? They have to. हाँ बता है लेकिन हर otherwise you have to preach him. Yes, but generally a standard note is coming that if they have not told us, we are not aware, because in a large volume it is very difficult to do. Secondly, I've seen one very typical case. अभी recently देखा था कि एक वेंड पार्टी था, उसे पूरे साल ट्रांजैक्शन हुआ, उसने मार्च में MSME रजिस्ट्रेशन ले लिया, and then he informed in March that I have taken MSME registration. So when he informed the company updated the record कि MSME हो गया. अब जैसे उसने रिकॉर्ड अपडेट किया ना, उसका पुराना बैलेंस MSME में चला गया. Now in hindsight this seems very easy. ऐसा क्यों किया? अलग अलग लेजर खुलना चाहिए था, तब सोचना चाहिए था, लेकिन नहीं. While doing actual work नहीं समझता है किसी को ये. And then suddenly when balances come up for tax audit reporting, और इतना बड़ा आउटस्टैंडिंग ये पार्टियां कैसे आ गया? Then you went back to say कि नहीं ये तो पुराना लेजर है, ये इसको अलग करो, ये लेजर अलग करो. So awareness about, because now it is there in tax audit, the implications are there, so it is becoming little more critical. पहले भी ये issue था, 5 साल से चल रहा है, आज का नहीं है.
As an auditor, you said, we are as per the information available from the management.
Basic audit तो करना पड़ेगा.
But as an auditor,
Basic audit करना पड़ेगा.
along with the confirmation, we can ask this question.
Yes, that is the process which there is there for last 5 years people are following. जो ledger confirmation जाता है उसमें भी एक step होता है, saying कि if you are MSME please inform us, if you are not we will not consider you. All those precautions you have to take, but all small companies में नहीं होता है सर. सब clients नहीं करते. Even if you insist everybody is not able to do, आपने audit के लिए 5 लेटर लिखा उसमें लिखा होगा, 100% cases में किसी ने नहीं किया होगा. Unless you are talking about very organized big setup जहाँ पे procedure है, हो रहा है बराबर से, सिस्टम से ऑटोमेटिक कंफर्मेशन जा रहे हैं, उसमें लिखा हुआ है तो बराबर है. जहाँ ह्यूमन इंटरवेंशन है इसमें मिस होता है. ऑडिट करने को अभी आपने जाओगे और पता चलेगा कि किसी को MSME का कंफर्मेशन भेजा ही नहीं था, तो अभी आप क्या कर लोगे बताओ मेरे को. सिटिंग इन सितंबर, व्हाट आर यू गोइंग टू डू? व्हाट चॉइस यू हैव नाउ?
Information available from the management.
अब आपका चॉइस बचता कहीं है, because of now you are in September, you have put yourself in a position where you have no choice but to close, because 30th September का ड्यू डेट है. आप बोलोगे 21 days का नोटिस देना है, 8 September, 4 September, 5 September, whatever date you put, short notice करो तो 30th भी लेके जाओ.
So that is all the more important for us to send confirmation and do a procedure
In advance.
in advance.
अभी ऑडिट में ऐसा हो गया ना कि if you bring issues to the last moment, now you are putting yourself in a problem. वो तो जो है वो है, बट उसके साथ साथ आप भी प्रॉब्लम में आ गए, बिकॉज अभी आप क्या करोगे? आइदर आपको रिलेशनशिप खराब करना पड़ेगा क्लाइंट के साथ प्रैक्टिकली, आइदर यू हैव अ रिलेशनशिप इशू कि अभी मैं नहीं करूंगा, मेरे से नहीं होगा, तो रिलेशनशिप इशू हो जाएगा, या फिर आपको कुछ और करना पड़ेगा. So you have put yourself in a position where you are just tied your hands. Now nothing can happen. Now you are finding solution where he has to actually find solution. वैसा हो गया ना अभी.
ऐसे ही हो रहा है.
ऐसे ही हो रहा है ना. तो क्यों हो रहा है? क्योंकि हम लोग भी थोड़ा लेट करते हैं ये इशू आइडेंटिफाई करने में. हाँ,
Edit log is the same.
edit log is because that issue they postponed it for 3 years. सर उन्होंने 3 साल डिफर किया है. Nobody realized कि अभी सबने सोचा और एक साल डिफर हो ही जाएगा, कुछ फर्क ही नहीं पड़ता है, आएगा तो देखेंगे. But when it came with such a chaos.
There is negative impact, there is always a chance. MCA can be a penalty.
वो होगा अभी.
5 lakh is a penalty.
वो इशू अभी है ही है. नहीं, because the question is once you say मेरा audit log is not properly maintained, second question is coming, इसके whether books of accounts are maintained or not. You have to report there also.
Something are mentioning except for what is.
हाँ बराबर है. तो which means आपने कहाँ पे कमेंट कर दिया कि whether books of accounts are maintained as required by law, वहाँ पे तुमने कमेंट कर दिया, मेन books of account पे जाके कमेंट कर दिया.
Sir, in a situation where please tally data is coming on emails, see largely, this is totally lost there. And it is a huge repercussion on us. Because very soon there are some laws that are being notified. Without notice and consent, if you have got data of someone, and उसमें audit log भी नहीं है, तो कितना compound है mistakes.
नहीं वो तो
Taking a tally data for audit now on emails is like suicide.
it will ना, because confidentiality से लेके सभी जगह पे बहुत प्रॉब्लम होते जा रहा है. Now this some of these issues are getting stretched beyond the limit. You cannot even imagine some of these things. So MSME में there are 5 or 6 points which are important. MSME there are 4 or 5 points which are very important. That capital expenditure पे it is not part of disallowance. That is one which is clear now. GST component अगर होगा MSME में, अभी वो challenging है पड़ा. GST component अगर है, आपने MSME आउटस्टैंडिंग 5 लाख रुपया है, उसमें GST भी है. GST का इनपुट क्रेडिट लिया तो डिसअलाउंस GST हटा के करना पड़ता, बिकॉज वो तो क्लेम नहीं किया था खर्चा, पीएल में डेबिट नहीं हुआ है. बट नाउ हाउ टू फाइंड आउट दैट फिगर इज अ बिग चैलेंज. हर एक केस में कैसा रिवर्स करके ढूंढोगे कि इसमें GST था नहीं था, हाउ विल इट कम, आई डोंट नो. ये चैलेंज. अगर फुल डिसअलाउ करना पड़ेगा वो एक अलग बात है, बट किसी क्लाइंट का टैक्स लायबिलिटी बढ़ रहा है तो देन ये GST पोर्शन हटाओगे तो थोड़ा सा रिलीफ मिलेगा. बट हाउ टू डू इट इज वेरी डिफिकल्ट. उल्टा 100% डिवाइड बाय 18 करके तो नहीं कर सकते हो. रिवर्स कैलकुलेशन में रेट डिफरेंट रह सकता है.
But anyway, you have to go bill wise.
हाँ बट हाउ,
Disallowance भी आप bill wise.
हाँ लेकिन सर कितना बिल वाइज करोगे आप. 50 वेंडर होगा तो 50 वेंडर, वेरी डिफिकल्ट. हाँ तो दैट इशू इज देयर. अभी दूसरा इशू आ रहा है कि TDS में भी डिसअलाउ हो रहा है, पेमेंट में भी नहीं हुआ है, तो दोनों में नहीं होना चाहिए, नहीं तो डबल डिसअलाउंस हो जाएगा. एक में 30% है, एक में 100% है. सपोज MSME का पेमेंट नहीं किया तो 100% डिसअलाउ हो जाएगा. उसी पे TDS भी नहीं काटा था. अगर आप 2 जगह रिपोर्टिंग करोगे तो 2 जगह डिसअलाउ हो जाएगा, मल्टीपल हो जाएगा. वो फॉर्म तो ऑटोमेटिक पकड़ रहा है आजकल. तो दैट इज अ केयर व्हिच हैज टू बी टेकन. देयर आर सम केसेस वेयर अकाउंट पे चेक इशू कर दिया 31st को ड्यू डेट पे, लेकिन क्लियर ही नहीं हुआ तो क्या करोगे. वो एक ऑडिट प्रोसीजर ऐड करना पड़ेगा कि भाई चेक क्लियर हुआ कि नहीं हुआ. तो बहुत बार खाली चेक बना दिया किसी ने तो क्या करोगे.
That to many companies are doing.
बट दैट इज अ प्रॉब्लम नो, दैट इज अ प्रॉब्लम नो. BRS में खड़ा हो जाएगा तो BRS में खड़ा रखेंगे उसको, तो वेदर यू विल क्लेम नॉट क्लेम, so that is another problem. So this is one area where some checklist, some thought process start of the audit करना पड़ेगा. लास्ट में नहीं कर, लास्ट में करेंगे तो we will have problems. So I think we have covered most of it. You can just, this is, I think it's okay.
If there are any questions.
Yeah, we can go to
take,
question.
Quick 1 or 2 questions. Any questions, please? Yeah.
So audit documentation, I have used a software called Inflow. I have seen a software called Idea Caseware, but that Idea Caseware is very expensive. There is this CCH क्या नाम है उसका?
Yeah, CCA.
CCH का audit software है, it is relatively
Yeah.
cheaper. इंस्टीट्यूट ने भी अपना ऑडिट सॉफ्टवेयर निकाला है, उसका भी लोग ने वो दे हैड गिवन सम इनिशियल लाइसेंसेस या इनिशियल राइट्स के लिए दोनों उन्होंने पब्लिक किया था. इंस्टीट्यूट हैज आल्सो कम आउट विद इट. देयर आर मल्टीपल व्हिच आर अवेलेबल. So idea caseware is there from very old times, but it is very expensive. वो per user basis पे वो लोग charge करते हैं, तो it is cost is also very heavy. So some of the standards easier ones are better because उसको customize करना पड़ेगा for our type of practice. Because everything cannot be done. वो 100% अगर वो international auditing standard को copy करेगा और हर एक में आपको yes no करने को बोलेगा तो audit complete नहीं होगा. So you have to customize to bare minimum which you need. तो सम ऑफ दिस उसमें आप उनका चेकलिस्ट निकाल के अपना चेकलिस्ट ला सकते हो, बट द इम्प्लीमेंटेशन इज अ लिटिल चैलेंज. इवन वी आर स्ट्रगलिंग टू इम्प्लीमेंट इट अक्रॉस ऑल क्लाइंट्स. 1-1.5 साल से ट्राई कर रहे हैं, हम लोग भी स्ट्रगल कर रहे हैं, क्योंकि वो ऑडिट करेंगे सॉफ्टवेयर में एंट्री करें, दोनों साथ में होता नहीं है. टाइम इज अ क्वेश्चन. टाइम, फीस, कॉस्ट बेनिफिट is a problem, but slowly and steadily you have to move towards it. Try to customize that, because also you have to finish in time. Otherwise तो assignment loss making हो जाएगा, documentation हो गया तो assignment loss making हो जाएगा, दोनों साथ में नहीं होने.
You just have to put your Excel sheet here.
Yes.
And the work.
So try to make it very simple. If you make it complicated, it will not work. बोलो.
Largely, this you can be absolutely, truth bear kind of.
हाँ.
Do you really feel, substance over form is still the all of the day, or because the final output and the final deliverable are now all subjective, whether whatever it is, but till the time form is not there, I mean, all penalties and everything is happening on the form. So do you think substance over form is still the call of the day, or do you want to say that form should be actually more relevant than substance?
Substance over form is actually more relevant, but you have to ensure that your backup documents to that are.
So, sir, वो तो form है.
नहीं, but फिर भी substance, because I will tell you reverse example. No, I will tell you reverse example. I will tell you a reverse example where form says everything is okay. Form says everything is okay, but substantially or commercially you don't agree to it. Still you will have to put your neck out and saying ये सब document बराबर है, पर मेरे को I am not convinced with this transaction per se. Commercially, this transaction does not seem justified to me. I will tell you example. I can give you example. Suppose किसी कंपनी ने बैंक लोन है, उसमें फंडिंग किया हुआ है प्रोजेक्ट के लिए, they have given loan to another person. लोन नहीं, एडवांस दिया अगेंस्ट परचेज ऑर्डर, डॉक्यूमेंट है, परचेज ऑर्डर है. नाउ इफ यू फील दैट कमर्शियली ये ट्रांजैक्शन में इतना एडवांस नहीं देते, you will have to question it, because NAFRA is questioning it. You will have to question. फॉर्म बराबर है, पीओ है, अप्रूव्ड है, पैसा दिया है, बैंकिंग चैनल से दिया है, प्रोजेक्ट के लिए दिया है, बट अभी आपको जाके देखना है कि वो प्रोजेक्ट में बजट कितना था, वो प्रोजेक्ट में कितना स्टील लगने वाला है, कितना सीमेंट लगने वाला है, उसके सामने मैंने कितना एडवांस दिया है प्रोक्योरमेंट के सामने. Are you supposed to look at it?
Biggest takeaway from this session, I am telling you.
तो आपको उसमें जाना ही पड़ेगा, आपको वो क्वेश्चन तो पूछना ही पड़ेगा. दैट इज द ऑडिटर स्केप्टिज्म व्हिच इज एक्सपेक्टेड आउट ऑफ यू, बट वेरी डिफिकल्ट टू डू. Believe me, it's absolutely difficult, because you may not sometimes even realize at that point of time, because when audit is happening, it is like a train running.
So
In that running train, कभी ब्रेक मारने का कि यार ये नहीं चलेगा, and what is my border line, वो judgment लेना is becoming more and more difficult by the day. Yeah, thanks. हाँ? उसका आंसर बहुत डिफिकल्ट है. What is to be done? Because
there is a threat that the next year auditor will be changed.
Should we report?
Or should we, how do we report that?
जो रेजिग्नेशन का रास्ता बंद हो गया है. Resignation का रास्ता बंद हो गया है. Resignation is not acceptable. Especially I am talking about listed companies. Resignation is not acceptable.
communicate with those charges governance.
वो तो उनको मालूम ही है सब चीज उससे कम्युनिकेट कर लिया आपने, फिर कितना
आपके
करोगे?
report में आ गया।
हाँ।
You can put it in key matters.
की मैटर्स में कुछ फायदा नहीं है सर करके, उल्टा अपने सर पे मार रहे हो।
सर
की मैटर्स में तो एना ही नहीं सकते हो सर।
1 लाख पेड अप कैपिटल वालों की भी ऑडिट हो रही है, उसमें तो ऑडिट कमेटी के और किसी को समझ नहीं दिया आप
नहीं, और की मैटर्स में डालोगे ना तो नॉन कंप्लायंस हो जाएगा सर। इनफैक्ट यू कैन नॉट डू इन की मैटर्स, सो आइदर यू विल हैव टू रिपोर्ट,
there has to be some
you will have to report only, and then whatever happens it happens, because दूसरा कोई चॉइस बचा नहीं है अभी एज एन ऑडिटर नाउ, बिकॉज उल्टा अपने को पेनल्टी लग रहा है।
and in fact let me tell you now चूंकि I was in a small little gathering where I was invited as a chief guest where Mr. Pandey ji also there, Nafa chairman. There he mentioned that now we are actually going as per firms, as per companies balance sheets, तो CCD उठा गया, Reliance उठाया, MND उठाया, LFS उठाया, जो भी एक्सर्जी है। But now they develop an AI model wherein MCA से एक फॉर्म की MCA की सारी बैलेंस शीट जमा हो जाएगी and they will be running it through a benchmark. So चाहे वो 1 लाख की प्रोडक्ट कैपिटल हो या लिस्टेड कंपनी हो, so what he is saying now becomes so relevant कि whatever you do, wherever you do, कुछ तो आएगा, but then how do you, so therefore I am saying form now is the most important. आपने documentation कैसे कर रखा है, that becomes one of the most critical aspects.
Okay. Thank you, everybody. It was indeed a very in-depth session. I request CA Atul Mathuria ji to give a formal vote of thanks.
Thank you, Prashant, for your excellent presentation. You have covered everything, right from accounting standard, auditing standard, what is required in Schedule 3 and all that. It would be very helpful to us, but at the same time, अभी डर भी लगेगा कि नेक्स्ट बैलेंस शीट जब साइन करूंगा तो मैंने सब कुछ देखा है या नहीं देखा है, particularly from time and fees, both the angles. I would like to thank Prashant and request all of you to carry with loud applause for all these knowledge sharing. Thank you.
So we will take a quick break. Our second speaker is already here. Before that, there is a few announcements. Taxman is there with us, and for our study circle members, it's giving 35% discount on books, and for the website, there is a 15% discount. And please, there is a Jain counter. Non-Jain people, please refrain from going and taking from the Jain counter. Thank you.